It wouldn't take 12 years of nonstop stimulus to keep a dead economy going. That's what we've been living in, a dead economy. Well, again, what tends to trigger recessions and stock market crashes after a really good boom like this is that inflation starts rising from overcapacity and overstimulation and all this stuff. And then that triggers, slowing the economy, that triggers stock markets to crash, and then that builds, and then that washes out inflation, brings high unemployment, lower spending, and that brings inflation down.
To this point, let's talk politics a second here. Joe Manchin, putting a dent, no pun intended, in Biden's Build Back Better plan. Your thoughts there?
Yeah, well, I mean, again, look at what I've got 4.9 trillion in monetary stimulus. Now they're talking trillions of dollars in infrastructure. This is the biggest overreaction in history. They've been stimulating now for a decade, 12 years, which would also tell you if an economy takes nonstop money printing and now endless fiscal stimulus just to grow at a couple percent, then the economy without it would be in a recession. So that should be obvious to people. People don't think that way. Why has the economy, see, when we went in, came out of the, in late 2008, early 2009, they printed the first trillion. If that would have just been a normal little monetary correction, a little rebalancing, and it hadn't have been a big demographic downturn and all that sort of stuff, we would have come out of it. It wouldn't take 12 years of nonstop stimulus to keep a dead economy going. That's what we've been living in, a dead economy. When we have this recession, we'll wipe out all the excess money and all the excess debt. That's what recessions do, make everything more productive. And by the time we get out of this recession, we will have fundamental uptrends again, because the millennial generation is going to have their boom from 2024 to 2037, something I've been predicting forever. That's right in the demographics. That's not something that changes. So we have to clear this out. Otherwise, we're dooming the baby boomers, are dooming the millennials with our debt bubble and our financial asset bubble, which are all have to get washed out because they're not real.
In your forecast, how much is the new variant weighing on the stock market correction? Did you calculate that into your forecast, Harry?
Well, again, that's another short-term thing, just like COVID. Yes, I'd say that's one of the triggers that's hurting this endless stock market advancement with printing ever more money. Okay, but it's also the government and the Fed sees this and says, "Oh my God, we got through COVID. Now we got this new variant." So that's what's keeping them from saying, well, we were going to taper, but they're going to keep backpedaling here. But again, I'm just waiting for that first crash. The only thing you can do is that first crash, I say, will be so violent that people will finally get what they've already thought in the back of their head. Oh, you really can't live on just printing money. We've been living on printed money since late 2007 when we went to the 2008 downturn. Why? For very good reason, because the biggest generation in history finally peaked in spending, and the trends have been low since. We have been living 120% on money going in the economy, ultra low interest rates, a 10-year treasury bond of 1.4% with 7% inflation. You think we would have that without all this manipulation of money print? This is a totally artificial economy, which means when it blows, it's going to blow even harder. It's not even real.
I understand you don't want to pin yourself to another month, but if I had to say, when does the first tranche of the crash happen? Is it Q1, Q2, Q3? Any indication?
I think Q1 is I think between now and January is the most likely time for that. I think it may have peaked in November 22nd, okay? Because I've been tracing stock markets, different sectors here and around the world. Almost everything is already peaked except for the NASDAQ and the S&P. That's the only thing. Small caps are down 13, 14%. A lot of countries have been down for months. Emerging markets have been down for over a year. The bond market peaked a year and a half again, the corporate bond market. These are all leading indicators that say we're building towards a crash. And like I say, it's hard to predict. When does that happen? It's possible November 22nd was the peak. We could also get a peak sometime in the first quarter. I'd be extremely surprised at this point if we don't peak and get that first crash starting in the first quarter. If it goes past then, I'm just going to be like, I don't know what to say. I mean, literally, there's a point where you have to say, I don't know what to say, because this has never happened. No, governments have never fought a bubble like this, or boom, which they created. This bubble would not have happened without governments. The 2000, 2007 bubbles, those were more natural. This is totally artificial. So